What is going on, investors? Hopefully, guys are doing well out there. We've got Nike Q4 earnings coming in after the bell. We'll go through the numbers like we always do here on the channel. We'll take a look at the revenues, the profits, a little bit of deterioration, a little bit from a profitability standpoint with Nike, all important revenue, all important geographical regions, including China and APAC, and see how that is going. And then we'll come over here and look at the stock chart, folks. We've got, what is this? What is it, a 30-year uptrend in Nike? We've got a 30-year trend in Nike. Now, you may be smart enough to say, well, the trend's going to end right here. 30 years in the making, it's going to end. I am going to say that I'm not that smart. And here we are with Nike, and we've got a great opportunity. So we'll get to that here in a moment. Now, year to date, this stock has not caught a bid like all of the FANG stocks out there. This one's down about 4.5%. It's going to go down a little bit more in the after hours. I'm seeing this one trade down by about 3%. Talk about that from a stock perspective here in a moment. The revenue coming in at $12.83 billion. That was just 5% growth year over year, but it did beat expectations of about $250 million. Nike does not give us upcoming quarterly guidance for the upcoming quarter. They don't even do it on the conference call, but they did say that share repurchases of $1.4 billion, reflecting 11.5 million shares retired as a part of a 4-year, $18 billion program that was approved back in 2022. Now, when we look forward, now, obviously, most recent quarter, we'll get into it here in a second, $12.83 billion. Wall Street expectations were closer to, we'll call that 12.6. The high end was 13.15 billion. It's really all about that upcoming quarter. Does Wall Street really believe we're going to get to nearly $13.5 billion in the upcoming quarter? That would be about 6% revenue growth. And I know what some of you guys are going to say. You know, look, you've got a stock that's trading what we'll call that 35, maybe even 40 times forward earnings, depending on what day it is. And you're growing like at a single digit rate. But I mean, you can pull up Apple, okay? Apple stock is doing this exact same thing. In fact, Apple has negative revenue growth. Now, Nike does not have the buyback that Apple has, but Nike is doing the same thing. They're doing dividend increases, they're buying back the shares, and they're maintaining a relatively strong growth rate. Now, come over here to the financials. Revenue up just 5% year over year, but if you pull it back for the full year, not that bad, up about 10%. Margins have been under pressure. Anybody that's went on Nike.com and did a little shopping know that you can get some Nikes on pretty good deals these days. Gross margins over the past year went from 45% down to 43.6%. That's a negative for a company like this. Look at the full year. Last year, you're sitting at 46% gross margins down to 43.5. But let me tell you what, okay, this is like a first world problem, if you will. 40+% gross margins on an apparel company this late in the stage of its existence is basically unheard of. Now, demand creation expense, that's your marketing, that's your endorsement deals, those types of things, up just 3%. So they've done actually a pretty nice job keeping, growing sales in excess of the marketing expense. Now, unfortunately, they have other overhead expenses that increased 8%. So your total selling expenses went up 8% year over year from 4 billion to we'll call that 4.4. So you take your 5.6 billion in gross profit, you minus off this 4.4. Company has a boatload of cash, not balanced out by a ton of debt. So they actually are earning interest on that cash to the tune of 28 million in the most recent quarter. So we'll just flow all the way down to net income. Went down 28% over the last year. That 28% includes an income tax benefit, which went in the other direction. Last year, they had a benefit of $65 million. This year, they had to pay $215 million. So if you strip that out, net income before taxes declined 9% over at Nike, primarily due to lower margins and higher operating costs. Now, flow down to the balance sheet. Company still has plenty of cash. Some of it has been burned through over the last year or so as they've bought back a lot of stock with the cash. Now, the number that I am looking at with Nike that gives me a little bit of excitement is the fact that your inventory year over year, while they haven't kind of churned through this inventory, they are running at essentially flat inventory year over year. That could help them stop the discounting so you can't get like Stanford Nike polo shirts for $10 at like a TJ Maxx or something. Company still has a lot of long-term debt, about $9 billion. But again, that's essentially balanced off by the cash balance. And when they borrowed this $9 billion, it was, like a really low interest rate. Now, come down here to the geographical regions. North America somewhat stalled out from a growth perspective, just up 5%. You look in Europe, we'll look at it kind of on a constant currency basis. That is really impacting these companies from a revenue and a financial perspective. That could be a tailwind down the road. You get a weaker dollar in relation to some of these other currencies. Well, the company will start generating more revenue and earnings from that. Europe up 7%. Now, actually the thing I'm excited about is China. China tends to fluctuate. We just can't seem to consistently get on a train with China. Now, obviously, COVID got in the way there for a couple of years, but Europe on a constant currency basis, 25% in the country of China. Its revenues overtaking the APAC region, which was just up 6% constant currency, 1% considering the floating rate. And look, I know it's hard to do, but if Nike is able to maintain a 25-ish% growth rate in the country of China, the rule of 72, you take 72 and you divide it by your growth rate and you get the number of years to double. So you're sitting at close to 3.5 years. If you can maintain a 20 to 25% growth rate in the country of China, you're going to double these revenues, which would get you on par with the Middle East and Africa business as it stands today. Now, what the company is doing over at Nike is it looks like they're trying to rekindle some of these, quote, wholesale customers. I noticed that their shoes made it back into Macy's stores, Foot Locker, Dick's Sporting Goods. It looks like Nike realizes that maybe alienating some of these physical stores wasn't necessarily the best idea. And so they're starting to bring some inventory back at some wholesale customers that they used to have in the past. That was up 7%, 14%, excluding the currency exchange. And if you go to Nike directly, that was up 20%. Now, the reason why we're focused so much on the country is China is look at those operating profits in Greater China, up 70%. And so you grew your revenues in the country of China on a constant currency basis by 25%. Your operating income, or your earnings before interest and taxes, up 70%. Every other region actually went down on a year-over-year profit basis, except for China. That's why if you can maintain, if somehow we can just get on a train and for, 8 consecutive quarters, Nike can grow at 20% in the country of China, well, the stock is probably worth buying. Now, speaking of that, I don't know how many earnings videos we've done on Nike at this point. It's been a lot. Every single time, it's the most simple thing to analyze from a technical perspective. And there's other companies like this. You can bring up like Costco, okay? Costco. I mean, it's like the exact same chart. I don't know what it is about companies like Costco and Nike. I love it, okay? Some people are going to point to price to earnings. Some people are going to look at the, year-to-date performance. They're going to look at this and that. All you have to do is look at this, guys. This is a 30-year uptrend on the stock dating back to 1993. Some of you might not even been born yet. I was just 11 years old at the time. Anytime this stock has gotten, and I'll change this purple line, we'll call it orange, fitting since we're looking at Nike, and orange is a critical color for the company's logos and their brands. Anytime you get close to this orange line, guys, look, it hasn't touched it. In 30 years, you've touched it like 5 times. So I really don't think I would wait until Nike actually touches this orange line. It's really when it gets underneath this purple line, which I've kind of dissected this channel in. Anytime Nike over the last 30 years has traded underneath that purple line, it has been a great investment. Period. End of story. They're buying back the stock. They've got a powerful brand. They've right-sized their inventory. If the country of China can stay in this momentum, and I know it's just never been able to do that, but if we can keep the momentum in China, that's going to be just a gigantic business for this company. Their margins, while they've slipped over the last year, are still epically high for a fashion brand of this size and this age. Its competition, like Under Armour and Adidas, constantly squabble all types of things, whether it's relationships with Kanye West or Under Armour just simply not resonating with anything other than middle-aged white males. This company hits it out of the park all the time. And I know I'm going to get comments. They're woke. They're this. They're that. You are not their customer. There are some brands that shouldn't go that advertising route. A company like Nike can put Colin Kaepernick in an ad, can put other types of influencers in an ad, and it's fine. In fact, it plays to the brand's strength. Love what we got going on over at Nike. And from a technical perspective, it's in a 30-year trend that's signaling essentially right now, today, it is a buy. Full disclosure, I have owned Nike shares for a long time. I can't remember when I bought this stock. I think it was back here in 2010, somewhere back in here. So clearly, I'm biased. I've made a lot of money on this stock, but it is about as simple as it gets, and we'll end the video there. Folks, it is a start of earnings season. In just a couple of weeks, we'll have the major bank stocks, and we will have all the major tech stocks following that here on the channel. My new employer over at Legacy Research, I have a link down in the description below for my newsletter. They're very supportive of this channel and supportive of what we have going on here. Make sure you sign up over there, and I'd love to see you again soon. Thanks for tuning in. Good luck with your investments.